So it's finally official. President Trump signed the funding bill to open the government back up. So now the data is starting to come in, and where's it going to take us from here? So what we're going to do today is something a little bit different. What I want you guys to do is put yourself in my shoes, okay? I want you to help me predict where mortgage rates are going from here. So what we're going to do today is we're going to go over all the financial news that we at least have up to this point, and then help me make a judgment on where you think rates are going to go up until the next Fed meeting. So without further ado, folks, let's get over to the news so you can help others figure out what the heck's going to go on with these and the whys behind it. So let's look at the data that we got today. The president signed the funding bill opening the government. But here's the problem we have right now. Boston Fed President Collins advocates holding rates steady, sees higher bar for future rate cuts. Why? Well, that's what we're going to talk about in today's video. So folks, my name is Dan Frio. My whole goal each day is to come in and explain to you guys what in the heck's going on with those and the reasons why. So today, the government's open, but then we have the Federal Reserve to contend with. So let's get to it. So we have a Fed President Collins. She's the Boston Fed. She came out and said, we shouldn't do any rate cuts. Why? Let's scroll down through here. Boston Fed President Susan Collins said she would be reluctant to support further rate cuts anytime soon, with inflation still high and policymakers hampered by a lack of data. Oh, okay. So what I want you guys to do is, with the data we have, help me and help the Federal Reserve maybe make the decision on what they should do at the next meeting. So let's get to it. So here's where rates are today. They dropped a little bit yesterday. There was really no rhyme or reason for it. I think it was just a hooray for a government coming out of shutdown mode. So we're going to have to see how these go today. But let's get over to this. And I know I go through these each day, but it's really important. This is what the Federal Reserve monitors. So if you're sitting on the Fed, that'll be our mock trial for today. You're sitting on the Fed, and here's the data points you have. Okay, what do? Okay, so let's drive through this. Why was the Federal Reserve created in the first place? Well, they were created to keep inflation in check and to keep the jobs market in full employment. Well, they came out at the last meeting and said, okay, inflation's going to be higher for longer. We get it. But now it's the employment numbers that we're really focusing in on. So here's the data points. I just want you to understand. Here's the data points that we've received since the government has been shut down. So we had ADP coming in with their mock trial thing, and they're saying, okay, there's about 50,000 people that got jobs in the previous month. Well, that's okay, but that's nothing great, but at least it's not crashing. Okay, but then we had the Federal Reserve of Chicago coming in, and they're saying all the analytics we did is we have an unemployment rate at 4.3. Okay, exactly where it is now. So unemployment isn't really spiking. But then we got that report last week that said there was 156,000 jobs lost in the month, the worst in 22 years. How can one have the same unemployment rate? One saying we gained 50,000, and one says it's the worst in 22 years. That's what everybody's contending with. So if you're on the Fed and you have these two mandates, what would you do? Well, let's keep moving over to the news that we're going to get, or we should have gotten. So here's what the bond market's looking like today, but we'll get to that in a second. Here's the news that we should have gotten this week. So on Thursday, we had right through here. This is, we should have gotten CPI, which is consumer inflation. We should have gotten the jobs report. We should have got continued jobs. This would fill in basically the whole gap on what you and I that sit on the Federal Reserve, we monitor to control the rate that we control, which is the federal funds rate. Okay, so if you're looking at this, you're saying, okay, we don't have any of that data, but what should we do? So now you can see the dilemma that they face. So they're saying, okay, with the lack of data, we don't know how these points are going to come in. Would you cut? Would you stay steady? Would you raise rates? Let me know down below what you would do. But if you're a homeowner, what should you do? Well, let's get over to this. So if you're a homeowner right now and you really want to analyze and say, okay, would rates today help me, hurt me? What would it actually do? Well, I created RateWatch 2.0. This is for homeowners out there. If you want me to track rates for you. So let's say, Dan, you're like, Dan, when rates hit X, reach out to me. I'd love to look at the numbers, see if it saves me some money. And if it does, we'll go ahead and lock in and start the paperwork. We'll put in your information right there. When the rates hit it, I'll most likely personally be calling you, emailing you, texting you, saying, hey, guess what? Your RateWatch just triggered. Let's look at some numbers. But what do you do if you're looking to buy, you're looking to build? Let me know your thoughts down there so far, folks, on the economics. Well, let's get over, the first thing I want to look at is this through here. This is basically the Chicago Mercantile Exchange. They do all these analytics to figure out, or kind of get in the brain of the Fed to figure out, what's the Federal Reserve going to do at the next meeting? So far that you've seen the data that you have, would you elect to cut, raise rates, or keep them steady? Let me know down below. But here's what the markets are telling us. They're saying in 27 days, the most likely outcome of this is, we're going to scroll down, and holy crap, 55.9%. Why did I pull out that number? Right through here. Okay, so it's right next to me. 55.9. Why did I pull that out? Well, that's the probability of a rate cut at the next meeting. Well, here's the concern about that. When the Federal Reserve cut rates at the last meeting, there was a 95% chance of another rate cut in December, the last rate cut of the year, the last meeting of the year. So this was 95, now it's 55. So the likelihood of a rate cut at the next meeting is plummeting. So that's what's causing the uncertainties in the market. Would that cause you uncertainty? So the data that we went through so far, you have the lack of data that we have, the ADP payroll numbers we have nothing on the inflation numbers we have. Would you be in the same realm as Boston Fed president? Or would you be on the side of, we need to cut rates because the overall economy is starting to struggle? And if jobs are really plummeting, should we beat it before it actually plummets? That's the question that you have, I have, and the Fed has. So let's recap what the market's looking like so far today. I'll give you all the data points, then I'll give you my thoughts on this, but I still want to know your thoughts down below. So let's get over to it. The markets are open. The government's open. Now the data starts to compile. So here's what my thoughts are. We're going to go over to here. Federal Reserve, inflation, I think they're like, okay, heck with the inflation for now. It's going to be right through here. So these jobs reports that we get or any indications we get going between now and the Federal Reserve's meeting is going to be huge. Okay, so my thoughts are the numbers aren't going to be detrimental. So it's not really going to push the Fed to, we have to cut, or they're not going to raise rates. I can guarantee you that. So is a further cut, in the cards? Let me know down below. My thought at this point is no. I hate to say it, but I don't think they're going to cut at the next meeting, and hopefully that is built into the market right now. But if the markets get a little bit surprised, could rates come down a little bit? Yes. But my thought is right now, these are kind of as low as we're going to get until we really get the data that we, as the Fed members, remember that's where we're playing today, and also the real Fed members, they need the data to figure this out. So at this point, folks, I might be on the side of a 50-50. There might be a 0.25% rate cut. There might be a 0% rate cut. Let me know what you think down below. So let's go over to here. Mortgage rates, they are a little bit lower. I predicted rates would be at 5.99 to 6.375 in Q4 of this year. So we're right in the middle of that. So we did pretty well on that. Let's get over to the bond market today. Here's what we have in the bond market right through here. MBSs are down 7 ticks. Let's see what a 2-day average is here. Yesterday was down. Here's what you have to understand, folks, right through here. This is the bond that we follow on our channel. This is a mortgage bond. It says at the top, MBS. What that means is the yield on this bond is the biggest component or the biggest part of your mortgage rate. Okay, so what you have to understand on this bond, if the price is going down, which it is today, that means rates are going up. This is a pretty big move for the day. Remember, we closed here, and now we're down through here. So a decent-sized move. I don't think it's going to be enough to really move rates today, but we go to the economic calendar. Again, there's really nothing here. We might have some Fed officials speaking daily. Not concerned about him. He's more of a rate cutter. Kashkarian, he's kind of on the fence, so I'm not looking at anything there really to sway the markets. The 30-year bond, that'll give us some direction on where yields are going, so we'll look at that. Here's the thing we got coming out tomorrow. The Atlanta Fed will be coming out with the GDP. Look at the GDP. If it's at 4%, that's a fantastic number. That means the productivity in the United States is doing very, very well. But then we're going to have people like Bostic and other Fed officials talking tomorrow. So how's this going to go? You need to let me know down below. In the Fed Watch tool, like we said, there's just a little bit over a 50% chance of Fed rate cut in December. So markets right now in the stock market, this isn't a good day so far. We got the indices across the board bad. We got oil up. We got the 10-year Treasury up. This is the non-Cinderella story. Markets are down, oil's up, and the Treasury yields are up. So not a good market day so far. But folks, this can turn on a dime. It could turn on a tweet. It can turn on an anything. So be prepared. If you're a homeowner, you're a home buyer, reach out to us. We'd love to help. My name is Dan Frio, folks. Here's what I do and who I am. I'm a loan officer. I'm licensed in all 50 states as well as Puerto Rico. And folks, I've been doing this for over 35 years. But I work at a bank. Here's the unique thing. The bank that I have, it offers me the federal license, but it's also set up with over 30 different lenders. And when I first spoke with them, I'm like, why? Probably the same question you have. Here's what they said. Okay, so when you have a customer call you, don't you want more than one option for you? And I'm like, yeah, that's exactly what I do as a broker. They're like, well, why don't you join us? You'll have a federal license and you'll be able to broker all over the country. So that's basically what we do. So our slogan here is one application, one credit pool. We're going to compare your loan with over 30 different lenders and folks who are in all 50 states as well as Puerto Rico and love to work with you. So if you need some assistance with this, if you're a homeowner, check out our RateWatch 2.0 tool where you tell me what rate you want to refinance. Or if you've already got a quote, upload your loan estimate to us. Tell us what your credit score is and when you're looking to close, and we'll get back with you. We'll review it. And here's what I want to ask you. If we can beat your competition on the rate and the fees, I'm hoping to win you as a client. So that's it for today, folks. Let me know your thoughts. You as the Fed president, what would you do with interest rates? Would you be cutting? Would you be steady? Or would you even be raising rates at this time? Let me know why. But that, hopefully, with all the data that we just went over, hopefully now you have a little more understanding on next going to go on those and the whys behind it. Thanks for watching today, folks. If you haven't subscribed and you want to learn more about this each day, you're a broker, you're a loan officer, or maybe you're a realtor, or just a buyer out there of a home, or want to make homes a little more affordable, subscribe over there so every time I post a video, you get an alert. Thanks for watching, folks. I'll see you at the closing bell today to let you know how this mess ends for the day. Take care.